Hello everyone. In this video, we are going to be focusing on the valuation process of the different businesses that participate in a business combination. It's important to know all these different values because they will act in all the accounting steps that we will do in any business combination. So considering that at least two companies participate in a business combination, we need to consider that for each of these companies, we have three different values. The first of them, and usually the lower one, is the accounting value of the company. It's a value that we establish applying accounting standards. We are usually based on the idea of prudence, and where valuation is always done with high security. This means that the value, as I said before, is usually lower than in other valuation methods, especially in the companies that are going properly. The accounting value of each company, as any accounting student would know, is the assets of the company minus the liabilities, the wealth that the owners of the company has. The next value that we have for any of the participant companies is the fair value of the assets and liabilities. This means that we take one by one all the assets of the company and one by one all the liabilities, and we obtain the fair value. For example, if we have a company that has a piece of land in the city center, in accounting values, the value of this piece of land will be the money that we pay. So imagine that you have a piece of land in the city center of where you live that was bought 20 years ago. The accounting value probably will be much lower than what somebody will pay today. So we take one by one all the assets, one by one all the liabilities, and we do this valuation process. And the next step is the fair value of the company. Which is the difference with the previous one? Well, accounting terms doesn't allow to value all the positive things that a company may have. For example, if we are thinking in a company like Coca-Cola, the value or the brand or a new project doesn't have a value in accounting terms. In those companies that are listed, the main measure to obtain this fair value will be the quotation of the shares. And if to any company listed in the stock exchange we look the accounting value, we will realize that it's much lower than the fair value of the company. And usually in between, we have the fair value of the assets and liabilities. This fair value of the company links in business combination with the amount we pay for a business. We have two ways of obtaining the cost of the business combination. On the one hand, identifying how much we pay in terms of cash. On the other, identify which is the quotation price of the shares. And so, two ways are used to obtain the cost of the business combination. As I said, we may have difference between the accounting and fair value of the assets and liabilities. How we call to these differences in the values in business combinations? We call them the fair value adjustments. And in our accounting process, the first thing we will do with the actuaries will be to update these values, to apply these fair value adjustments to obtain the fair value of the assets and liabilities. If we compare steps numbers 2 and 3, again, as we have seen in any course of mergers and acquisition, there may be a difference. The difference between these two values is not recognized for the accounting standards, and that's why we call it goodwill or negative goodwill. This is an increase in the price that we pay due to the brand, due to the market they are acting, due to several things that doesn't fulfill the definition of an asset or the definition of a liability, but that they have a valuation. We are able to pay more or less due to the existence of these assets and liabilities. So that's why it is also important to have them into consideration. Thanks for your attention, and I hope this video has helped you to understand a little bit more the valuation process in a business combination.